Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Markets will focus on the developments in US politics once again as President Biden has decided to not run for a re-election and Vice President Harris has been endorsed by the Democrats to run for the presidential race. On the central bank front, China has cut its benchmark lending rates by 10 basis for its one-year loan prime rate. Morning, JK, your thoughts on the recent developments?
Good morning, Swaraj. Yes, US markets did not have much economic data on Friday, but you cannot, you cannot have a situation where US does not influence the markets because we had other news. One, one which is neutral, one which is negative. The outage cost on the systems globally after some glitch in the updates at Microsoft was big, and that actually it couldn't have come at a bad time, worst time for the markets, because markets are already looking a bit shaky. Nasdaq was seeing a big sell-off in the last few days, and this just added to the bearishness in the market. We saw a deeper sell-off. And in fact, it didn't spare Indian market also. India also saw some sell-off in the market. So even though people are looking forward to the budget with a lot of positive expectations. The other development in US, yes, as you mentioned, Biden, stepping down from the race to the presidency, and possibly Kamala Harris being endorsed. But then it's a lot of uncertainty. So people who had built up positions in anticipating Trump's easy passage, they've seen some unwinding of those positions also. So what I mean to say is that in lack of data, but these factors were actually playing out on the markets as well. But coming to the currencies or even bond market, they're not clear. There are more uncertainties than clarity, because if you look at US economy, there's been mixed economic data, somewhat towards a weakness in the economy, but not really very clear. Then the monetary policy in the US, markets are discounting at least two rate cuts, but Fed's members say that the rate cuts will be there, but the timing is not certain. Geopolitics, again, a lot of uncertainty. Politics in Europe as well as in US, again, a lot of possibilities are. So people don't have a clarity on what kind of policy to look forward to. And again, if you look at China, the third plenum of the Communist Party didn't really come out with anything major announcement for addressing the weakness in the economy. Of course, they did cut the policy rate today. People are hoping that there will be more measures, but then so far, whatever has come out has been disappointing. So all in all, a lot of uncertainty. So the markets continue playing the range. Yields are not going much lower. One more factor that's supporting the yields is that there's a huge amount of nearly 170 billion of issuances of 2, 5, and 7-year paper. So when there is so much of supply of fresh paper, the weakness in the data or the inflation does not matter for the market, because someone will have to buy up those bonds to keep the yields lower. So the mix of factors and uncertainties keeping the markets range bound in bonds as well as in the currencies. On the stock markets, of course, seems to be some deeper profit taking that is going on. So I wouldn't put a dollar index to be either too weak or too strong for this week. It has to face a lot of data this week, PMIs from various regions, and then GDP data for Q2, estimate one, and then the PCE core inflation just comes just ahead of the FOMC meeting. Also, we also have BOJ meeting coming up next week. So market will justify itself by playing out the range. As far as the Indian rupee is concerned, last week we had accretion of more than 2 billion to the FII flows. But despite that, dollar rupee was trading almost at the weak point of its historical movement. So that gives us a feeling that central bank is letting the rupee slightly on the depreciating side. Again, it's a very painful slow move, but at least the direction has been upside. That is also keeping the export selling on the lower side, but importers are getting a little bit worried about further weakness and therefore getting more active. So let's see if the budget, about which a lot of expectations from the markets, particularly in the equity side, is very positive, and whether that lives up to the expectations, or whether once that is over, more profit taking sets in as a buy rumor sell fact. That is something that we want to see. Yes, budget is likely to be good in a broader perspective. Forget the market positioning. For the economy, I think there will be a lot of positive factors, including fiscal being on the containment. So not seeing very, at least for the rupee, despite the current trading level at high point, I don't see rupee weakening too much immediately. I will generally follow the global sentiment on the risk as well as on the dollar index. But yes, this is going to be a very busy week for the markets. Thank you.
Thank you, JK. And as you said, it's going to be very busy, and a lot of PMIs from various countries: US, Europe, UK, even India, and US PCE, Q2, US GDP. So a lot of data to look forward to. And of course, domestically, we have the budget to look forward to. So it will be a plethora of updates from us. Just quickly summarizing, President Biden, he has stepped down. It has added uncertainties to the political game. Chinese Plenum didn't come out with any major updates, but they did cut their benchmark lending rates. But overall, the updates from China has not been so encouraging for the markets, which has been looking forward to some big changes or big direction from the Chinese government, as a directional move. Yields in the US have not been going lower. There is also a lot of supply of paper, which JK mentioned, which are keeping the yields elevated. And for rupee, we are trading at the weaker end of the historical range, and so it seems the central bank is letting rupee depreciate very gradually. That's it from us today. Thanks for listening. Do tune in tomorrow for the latest in the financial markets.